Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back through daily crypto news and analysis. And today we are going to be talking about Ripple and XRP. So sit back, relax, and before we fully jump on into this video, I do just want to ask guys, could hit that like button. It does help the channel grow immensely, and of course, I always do greatly appreciate that. But with that being said, let's dive in and let's talk about it. So let me make sure everything is refreshed, make sure everything is up to date. So here we have Bitcoin sitting at about 36.4K, Ethereum sitting at about 2.7K, and of course XRP still ranging on that solid 200-day EMA support zone at a roughly 60-cent zone. So things are still looking pretty good in terms of the support zones that we have been ranging on, specifically even Bitcoin coming down to like 35.5K, which is a perfect test of a solid demand range going all the way back to like January of 2021. Honestly, as we are really kind of looking at this market, I still believe that we are on this massive, support zone on a lot of these major assets, even regarding, Bitcoin, right? Now, this doesn't mean that we're not in a bearish price zone, because technically we've been in a bearish price zone since going back as far as like November, breaking down from November to now. But I'm not too concerned. I mean, like, everyone still thinks that, oh, this is no longer a bull market, right? Just because we're, trading sideways. And I do love the fact that everyone is really kind of just, getting to the point where they are fearful, they're shaken out, they're saying, it's done, it's over, get out. If you don't get out, you're going to lose all your money, blah, blah, blah. We've seen these exact same decisions in the past before, specifically even on XRP and Bitcoin, right? So going all the way back to 2017, I don't know if you guys were here during 2017, but during this time, we've seen shakeouts along the way. In fact, we went all the way up to almost like $3,000 before coming down to about like almost $1,900 exact. We ran up a little bit more to about like almost 5K, and then we had these nice deep corrections all the way down to like almost 3K. And during this entire time, we did see, again, short sell-offs, which shake out individuals all the time. I mean, this was a nice spike up to $9,500 all the way down to about like $5,900. And we've seen this even during March, right? So I'm sure that a lot of you were probably, were here probably throughout the March of 2020 drop. But, when we talked about this, we hit about like 10.3K, and then we came down all the way to almost, $3,000 on the Coinbase chart. On here, it's, showing 4,900. But this was enough to shake everyone out. We almost, there was a lot of people saying, all right, we're coming down to $3,000. We're coming down to $3,000. And even right now on Bitcoin, we're sitting at around like, 36.4K, and I still see people calling for 10K, 20K, 28K. Honestly, those levels are most likely never going to be hit. But I do love the fact that we are seeing that reversal from the Fed announcement yesterday, to see that 180 on the charts, because, hey, we now have extreme fear throughout this market. We are seeing a lot of individuals being shaken out, which tells me, hey, this is great for the overall market, because as we do start to, move in price, there will be a lot of FOMO that does happen around crypto. Everyone is constantly saying, dude, how could you even think that we are in a bull market when all retail demand has, basically washed away? Well, that's exactly what we want. We want people to be shaken out. We want people to, basically get out of this market because they are fearful and they are scared and worried. And then all of a sudden, once they see a massive bullish candle engulfed on the chart, that's when they FOMO right back in. And, I'm not going to say that it's not needed. It's 100% needed to continue to push the market up. And that's exactly why liquidations and short squeezes are 100% necessary for the market. And they will happen here. They will happen later on as well. They happen at the times where it's almost predictable as well. The Fed announcement was 100% predictable in terms of where we were headed after that. It was not a sustainable move, and we did hit, again, resistance on the chart. But we have been seeing a lot of updates around money as well in general, in terms of economics and finance, not specifically even regarding the Fed, but also just around the world. We do see here just in Bank of England raises interest rates to 1%, the highest since the financial crisis, and warns the economy is on course to shrink this year. The funny thing about this, and I shouldn't even say that, it's actually funny, we just seen the U.S. GDP drop 1.4% in quarter one of 2022. In latest evidence of recession prospects, GDP drops 1.4% beyond earlier expectations of the low 1.3% growth. Fed's interest rate hikes might be a factor in the GDP decrease. Recession fears fuel the uncertainty, while some experts believe the quarter one report is not definitive. And honestly, yeah, I mean, we're seeing, in terms of inflation rates, in terms of the economy itself, and a recession. I do believe that a recession is nearing. I think that when we talk about a recession, it's most likely going to happen around 2023 to 2024. We actually do see here, financial giant Goldman Sachs saw a nearly 35% chance of negative growth a year from now. Deutsche Bank gave a similar prognosis, agreeing on a significant recession hitting the economy in late 2023 and early 2024. Thus, the recession could come on back of the Fed's further quantitative tightening. And of course, we did see Jerome Powell even say, in terms of inflation rates, the only way to really kind of deal with it at some point in time could possibly be a recession, which they don't feel too bad about doing so, which it's all, in my opinion, this is all one big show, because we know that they printed over 80% of the US dollar in circulation in the last 2 years alone, basically causing this recession. And now they're saying that, we would basically need a recession to, counter the inflation rates. It's just comical to me. But we also do see breaking news. The Bank of England has warned that the UK economy will slide into recession later this year as higher energy prices push inflation over 10% and cause the worst squeeze in household finances for many decades. I actually got a call from my energy provider just the other day saying that they're increasing the prices of electricity. So, as we do kind of look at what's happening around the United States, I would say in terms of inflation, we are probably well over 10%. I don't believe that the 8.5% the inflation rates that they have been putting out is logical. But again, this is also why I don't hold the US dollar. I mean, 8.5% year over year decreases in your bank account. No, thank you. I'd rather hold crypto. And we also do see here, London is ready. Listen closely to this, guys. So Brad Garlinghouse actually puts, I should say, he lets on a little bit too much information here, because we never really heard this specifically from him. I mean, we've seen it in the news before, but listen closely to this.
The UK, Japan, Singapore, I mean, there are clear...
So I want you guys to understand that he mentioned Singapore and Japan, but also the UK. Ripple has been positioned in Singapore and Japan through, of course, things like SBI, but I find it interesting that he is mentioning the UK here as well. But this is all regarding regulations.
Regulatory frameworks. They've done the hard work to create those regulatory frameworks that has allowed investment capital, that has allowed entrepreneurs. And you're seeing a lot of entrepreneurs that may have started here in the US move because they need that certainty.
And he does mention certainty around, of course, regulations. Honestly, though, when we talk about the UK, it seems like London is ready. In fact, when we talk about the UK specifically around even Ripple, we did see, of course, the Digital Pound Foundation. Now, the Digital Pound Foundation is not a 100% confirmed, CBDC project. It is just basically a group that is working to, implement the CBDC, aka the Digital, Pound. But when we look at this, I think that this has a lot of promise, and I think that it will most likely be the number one choice for CBDC in the UK. Of course, working with Quant and Ripple. But I do kind of go back a little bit in time to April 23rd, where they did have the Quant meeting with not only the Bank of Canada, but Massachusetts Institute of Technology, Visa, and Quant. This is from the Digital Pound Foundation, but we do see talks around even the Bank of Canada. We are seeing a lot of push towards CBDCs even around the world. But of course, you do see Quant CEO to address global CBDC implementation at Financial Times Digital Assets Summit next month. This was actually one that I've been watching closely in terms of just an investment opportunity. I think that Quant is probably one of the biggest investment opportunities as well, combined with XRP, because when we talk about Quant, Quant is actually working with the Digital Pound Foundation with Ripple as well as an interoperability layer. But also, just from April 29th, join us on the 19th of May for a live webinar on the topic of financial inclusion. Electroneum founder and CEO will be providing the keynote speech, followed with even Ripple and a few other companies, as you guys do see here. Definitely look at for Electroneum as well. Electroneum is very key in terms of the entire puzzle, though. Putting all the pieces together, the funny thing about this webinar is that we actually get a little bit of an in-depth view on this. So let me actually zoom in real quick for you guys here. So we do see, how could a digital pound facilitate financial inclusion? And we do see all around the world, governments are exploring the introduction of central bank digital currency CBDCs, including the Bank of England examining the case for introducing a digital pound in the UK. A number of perceived benefits of having digital currency have been proposed, with a key element being the ability to facilitate greater financial inclusion. But how should we define financial inclusion in this context? By universal access, by cost, or by efficiency? And is inclusion actually an inevitable byproduct of CBDCs? What are the challenges? And they basically are going to be talking all about this. And of course, like I've said, Ripple is positioned here, Electroneum is positioned here. A lot of key players are working with the Digital Pound Foundation, which again is just a group based upon a possible implementation of the Digital Pound itself. And the Digital Pound Foundation, in my opinion, will play a key role in this. Specifically, the companies that are working with in this group, which are like Ripple, Electroneum, and even Quant. But last but not least, I do want to finish this up with one last thing, and that is, of course, talks around regulations and things like that. We do see investment firm Fidelity will have to explain how they will invest or include Bitcoin in their retirement accounts as requested by U.S. senators. The lawmakers are concerned about a possible incompatibility as the firm has been involved in crypto mining since 2017. And I think that this is funny. So Senator Warren, I just want to know what makes these individuals want to attack and target crypto so bad. In my opinion, it's because crypto puts a very, very tight rope on the US dollar. I think that when we talk about the US dollar, I think that it is, these major individuals worried and concerned about crypto possibly, usurping a massive amount of dominance around the US dollar. Because think about it like this, right? We've seen Bitcoin settle, I think it was like 18.6 trillion, or I think it was like $18.6 trillion worth of transactions in 1 year, which was way more than Visa. And when we look at things like that, right, you could see the evident demand around, again, crypto payments. I work in graphic design with my design agency, and a lot of the customers that come to us want to pay us in crypto because it's just cheaper for them instead of utilizing something like PayPal or, some sort of payment method. So when we look at something like this, again, like I've said, I think that Bitcoin and crypto are definitely usurping a lot of dominance around the US dollar, or maybe they are just worried about it doing so. But they are mentioning a few things here. So first off, we do see, despite a lack of demand for this option, only 2% of employers express interest in adding cryptocurrency to their 401k menu. Fidelity has decided to move full speed ahead with supporting Bitcoin investments. The letter also mentions significant risk of fraud, theft, and loss. But we do see the authority also pointed out risks related to cryptocurrencies, extreme volatility and high speculation, custodial and record-keeping concerns, and others. In short, investing in cryptocurrencies is a risky and speculative gamble, and we are concerned that Fidelity would take these risks with millions of Americans' retirement savings. Yeah, we need to protect these Americans because, if they are investing in cryptocurrency, they are going to lose it all. Yep, 100%. We're definitely not going to lose, money investing in the US dollar, right? Not at all. At a 8.5%, inflation rate, or maybe, 10, 15, 20%, who knows, with, gas and rent prices being 50% plus increased, while again, inflation is only at a small 8.5% figure. But yeah, investing in cryptocurrencies is extremely risky and a speculative gamble. But the US dollar is not. See, this is the issue, right? They don't want you to invest in things that could drastically increase in value and also make you rich. In my opinion, when we look at the whole thing with the SEC from the beginning, it's always been we are protecting U.S. investors. The issue here is that they are not trying to protect you or me or anybody else, okay? They're trying to protect themselves. They want to make sure that the banking legacy system is continuously working. They don't want to change anything because they are getting filthy rich off of the legacy system. You and me are not getting rich at all. Okay? Investing into something like crypto allows for a lot of doors to open for the average individual. You can invest into DeFi protocols. You could invest into NFTs. You could literally, the possibilities around crypto are endless. But also, you are investing into companies that are drastically changing the entire landscape of finance. And that is an issue to them. Because again, for something like RippleNet, right? With XRP, you cut out the middlemen. The middlemen are getting filthy rich. And if you cut those people out, the bankers are extremely, extremely mad. And when you have bankers that are mad, when you have these high tier elites mad, you know exactly what ends up happening. Okay? It gets targeted. So with that in mind, I think that a lot of the argument points around crypto in terms of volatility, it's this, it's that. I think it's all, just water under the bridge. I don't think that's anything to even worry about. In fact, we've talked about volatility in the past with XRP, with Bitcoin, with Ethereum, with all of it. In terms of the dollar, it is actually less volatile in terms of payments. In terms of long-term holds, yeah, 100%. It is a little bit volatile. More volatile than stocks, but this is something that you are holding long-term. Think about it like this. Go and compare, a few stocks in terms of their yearly charts and compare it to Bitcoin going back to 2013, for an example. Okay? Crypto, compared to stocks, has a lot larger of an ROI value behind it, in terms of the long-term span. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys want more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. With that being said, I hope that you all have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.